Take a moment, look at the disclaimer. This content is for educational, informational, entertainment purposes only. And nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to tell you how BTA look at the market, how we analyze the markets. This is Rod from BTA, and we are known as the Middle Traders. Let's take a look at the Major Market Index ETFs at the close, the end of day, on June the 22nd, Wednesday, June the 22nd, 2022. And here we have a daily chart of the DIA. Daily chart of the DIA. And the ETF that tracks the Dow Jones Industrial Average. Let's look at our moving average chart. Now, it's something very interesting that happened, so we need to get that out the way first and foremost. You notice that today's action traded right up to this green line here, the green moving average line, which is a 9-day moving average. We traded right to it and pulled back and closed right on top of the 5-day moving average. Now, that's interesting. We found resistance right at a downward trending 9-day moving average. And the volume was higher than average and higher than yesterday. Okay? So lower prices with higher volume than the previous day. But granted, we only closed down on the DIA about 0.2%. Okay? So it was only 0.2%. So it wasn't like it was a big distribution day, all right? But it is a down day, and the volume was above average. But we stopped right at a downward trending 9-day moving average. That's very interesting. So I think you know where I'm going with that, all right? We have to see prices get above this downward trending 9-day moving average right at 308. That moving average is at 308 right now, okay? And then we got a downward trending yellow 21-day moving average. But for right now, we're trying to close above the 5, this white line. We're trying to close above the 5-day. We did close above it yesterday, but we got rejected at the 9-day moving average, a downward trending 9-day moving average, and we closed right on the 5-day moving average, the white line. The volume was higher and above average. So we got to wait and see now if we can get above that downward trending 9-day moving average. But it is getting a little better because at least the 5-day moving average is not pointing straight down anymore and it's turning sideways. But we got rejected at that downward trending 9-day moving average. Okay, so now let's look at our structural chart for the DIA. Okay, very interesting once again. All right, very interesting once again. Got to be careful, got to be patient. We're not going to get in at the exact bottom. We're not going to get out at the exact top. We want to make money on the middle. That's what we want to do here at BTA. You want to eat safely, okay? Look at that overhead support level we spoke about on Tuesday, right here. We got rejected once again at this overhead resistance level. I said support, I'm sorry, overhead. It was prior support. It was prior support from here, okay? It was the low, the second low on that previous double bottom we formed right before we went into consolidation. So it was prior support, but now it's acting as resistance. We found resistance right at this overhead resistance level right here. We spoke about it yesterday, 306. 305 is the bottom one, and 306 is the top one. Once again, we traded up, traded above it, and it got rejected, and we closed below it. Today, we traded up, traded above it, got rejected, and we closed below it. We're still finding support at this internal trend line here, but the problem is we can't get above. It seems like for the last 2 days, we can't get above 305 or 306 and close above it, Okay, so we're starting now to get above the downward trending 5-day moving average, okay? So we can start taking a look at something, Okay, because it's nothing to look at if you trade. Did you hear what I just said? Are you following me? There's nothing to look at if you're trading and closing below a downward trending 5-day moving average. Okay, we're finally starting to try to get above that, but the 9-day moving average, we can't seem to get above that one now. We got rejected twice at the 9-day moving average, and now we got rejected twice at this support level, which is the previous bottom. All right, prior support level. I keep saying support level because it was a prior support level right here. It was the second low on the double bottom, but it's now resistance at this point, right? So prior support now has turned into resistance. We keep getting rejected at this resistance level at 305 and 306. And now we're getting rejected at the downward trending 9-day moving average. The 9-day moving average is going to keep you on the right side of the trade. If you're long and closing above the 9-day moving average, you're on the right side of the trade. But if you're long and you're below a 9-day moving average, you're not. The 5-day moving average is our short-term momentum indicator. Did you hear me? The 5-day moving average is our short-term momentum indicator. Short-term momentum indicator. The 9-day moving average is going to keep you on the right side of the trade. I hope you're picking up the jewels that I'm dropping right now. I hope you're picking up the jewels that I'm dropping. The 9-day moving average has rejected it twice. Okay. Let's now look at let's take a look at the guppy. Nothing changed. Okay, as you can see, nothing changed. We still stuck below the downward trending green faster moving averages. Nothing changed on the guppy. Okay, it's nothing to talk about. The guppy is still telling us the momentum is to the downside. We still below the downward trending faster green moving average, and the downward trending longer term red moving average is pointing straight down. So the guppy is telling you the momentum is clearly to the downside. Okay, so that's the DIA. All right, we have to work on that first. We see the stochastic and the MACD and everything is still definitely bearish. Okay, that's still bearish. All right, so we can just look at that real fast and then we can move on. Okay, but that's definitely bearish. If you look at the MACD up top, you got the bearish crossover right here. The histogram is expanding way down to the negative side, and the MACD line is well below the blue signal line. The momentum is clearly to the downside. The stochastic right here is below 20. It's at 17, and we got a bearish crossover up here. Okay, where the stochastic line crossed below the signal line, and it's well below 50, and now it's definitely in the oversold level at 17. The KST, which measures the momentum, the pure momentum, the rate of changes, has also given you a bearish crossover. So all the momentum is to the downside. It's clearly all the momentum is to the downside. Okay? It's momentum to the downside. Now, let's look at the SPY real fast. All right? The SPY did the same thing as the DIA. Look at it. It's very interesting that we got rejected right at the 9-day moving average, a downward trending 9-day moving average. And we closed right on the 5-day moving average. The 9-day moving average, downward trending 9-day moving average, acted as resistance, right at resistance, almost to the penny. And we closed right on this sideways, downward to now moving sideways 5-day moving average. And we got the downward trending 21-day moving right overhead. So the 9-day moving average, the green moving average line, is at 379. We closed right at the high, right at it. The high today, not closed at it, I'm sorry. The high of today's action is stopped right at a downward trending 9-day moving average. It acted at resistance. The 9-day moving average is at 379. We closed at 374. 379 was right at the high of today. Okay, the volume was almost the same as yesterday, just a little bit higher. Okay. The Standard & Poor's, this is the SPY, right? This is a daily chart of the SPY, by the way, just so I can make sure we get that out of the way. This is a daily chart of the SPY, the ETF that tracks the Standard & Poor's 500. Well, the volume was slightly higher than yesterday, okay? And we had a close of 0.2% also. It closed down 0.2%, 85 points. Well, it's not a big distribution day, but it is distribution. Okay, so we closing and we got rejected right at the downward trending 9-day moving average. We got to get above that. All right, it's very dangerous. We got to wait and see if we can get above that. Let's look at the structural chart. Let's look at the structural chart. Look at it. Okay, you got to be careful. You got to be careful. Look at it. You see the structural chart here? We are trapped below these internal trend lines. Okay, we trapped below these internal trend lines here. You see these internal trend lines? You see it? You see this downward trending internal trend lines right here? Okay, we found resistance right at it yesterday. Today we broke above it, closed right back below it. But we have been finding support right here at this horizontal support level at 371.63. We found support there yesterday, and we stayed above it today. But we stuck below this downward trending internal trend line. Okay, we stuck below it, and we found resistance at the 9-day moving average. We get above that, we got the low, the second low of the previous double bottom that was formed right here. All right, so we get above this downward trending trend line. We're coming up to here. That's at 380. Once we get there, we got this next downward trending internal trend line right here. So 380 is a number for us. We got to get above that. And that's going to put us right near the 21-day moving average, okay? If we go back to the moving average, if we go back to our moving averages over here, look where the 21-day moving average is at 390. Okay, the 21-day moving average is at 390. We need to get above 380, okay, before we can say that we out of all of this here. This is a lot of overhead resistance, a lot of internal trend lines, and this horizontal support level right at the low of the prior double bottom right here. Okay, there it is. It's at 380. And then we got this internal trend line right here. So if we could get above this internal trend line, we got to trade up to here. That's about $6 from where we closed at today. We closed at 374. So we got to trade up to 380, break above that. Okay, that can be a lot of overhead resistance. We got to see on the daily chart. That's what we're looking at. The momentum is the same with the SPY. Okay, with the SPY. Here's the momentum chart. It's the same. Okay, you can see the MACD. The MACD had a bearish crossover. Histogram expanded to the downside. It just moved up just a little bit today, but it's clearly the MACD line is well below the signal line. The stochastic had a bearish. I hope I didn't say bullish crossover here. That's a bearish crossover on the MACD. Okay, that's a bearish crossover on the MACD. I hope that's what I said. If I didn't, I apologize, but let's repeat that. That's a bearish crossover on the MACD here, and the histogram is expanding to the downside, moving up just a little bit. But the signal line is the MACD line is well below the signal line. You got another bearish crossover right here. So we got a bearish crossover on the MACD. We got a bearish crossover on the stochastic, and look at the stochastic line, well below 20. It's at the stochastic line is at 17.38, and the KST. The no sure thing, baby, okay, it also has given us a bearish crossover, and it's below the zero line, okay? So the momentum is clearly to the downside, all right? The momentum is clearly to the downside. The guppy is not going to look any better. You see the guppy here? Look at the guppy, all right? The guppy is not looking any better. The magenta line of closing prices for the SPY, this is a daily chart of the SPY with the guppy. The magenta line of closing prices is stuck inside of this downward trending 9-day, downward trending faster green moving averages. Downward trending faster green moving averages. And well below the downward trending pointing down, trending red longer term moving averages. Okay, momentum is clearly to the downside. That's the SPY. Let's look at the Qs. Okay, let's look at the Qs. Let's go back. We'll come back to the guppy on that. Let's look at the Qs. All right, here's the Qs. Here's the Qs on the daily chart of the Qs with our key moving averages. You see it. We below the downward trending to sideways 9-day moving average. We tried to trade above it today and it got rejected. We closed right above this downward trending to sideways 5-day moving average. The yellow moving average here, the 21-day moving average is pointing down. The 50-day moving average is pointing down. We're below a downward trending 9-day moving average. We got to get above it and close above it. I was watching it this today. I said, can we close above the 9-day? Can we close above the 9-day? It didn't happen. Look at the volume. The volume is higher than yesterday. The volume is higher than yesterday. That's showing distribution. The QQQs closed down 0.2% also, 0.26%, almost 0.3%, 72 points for the Qs. This is the QQQs. Daily chart of the QQQs, the ETF that tracks the NASDAQ, specifically the NASDAQ 100. You see it. We got distribution. Let's look at a structural chart with our trend lines, horizontal support levels. Let's see what that's looking like here. All right, let's bring that up. There it is. Okay, there it is. Let's bring this up so you can see it. Look what happened. You traded right up to that resistance level at 284.94. You traded right up to this horizontal resistance level right here and this downward trending trend line right here. You see this downward trending trend line here. Today we traded right up to it and it got rejected. Okay, at least we closed above the second bottom with the resistance at 280. We closed at, it's at 280.21. We closed at 280.67. But we got 284.94. This resistance right here at this fractal that we had to get above. Today, you see, we still closing, which is good. We closing below this fractal right here. We closing above that fractal rather, the 280 level. For the last 2 days, we tried to close above it, but we found resistance on both. Well, actually, we found resistance back here. It got rejected. It sold off. It ran back up, tried to test the 284 level again. It couldn't do it. Today, we traded right up to it almost to the penny, the 284 level, 284.94. You might as well say 285, okay? Today, we traded right up to it, and it got rejected, and it would pull back, and we got back below this downward trending trend line. You see it, okay? You see it. You see it, all right? It's overhead resistance, and we can't seem to get above this downward trending 9-day moving average. Now, for the QQQs, I will say that at least the momentum indicators are starting to look a little better, all right? Look at the MACD here. Look at the MACD here, all right? We are starting to get a bullish divergence with the MACD and price. Price has made a lower low. The MACD made a higher low. That's a bullish divergence. The stochastic is also making a bullish divergence. As the prices are getting lower lows, the stochastic is holding steady. And now the stochastic line, the yellow line, okay, of the stochastic line down here, you see the yellow line right there? It now has gotten above 20, and we got a bullish crossover at the bottom. That's great. The MACD line right here is trying to get turning up, moving toward its signal line. Maybe it'll give us a bullish crossover here. The histogram is starting to get smaller, telling us that it's less downward momentum. The momentum is starting to wane to the downside. Did you hear me? Are you following what I'm saying to you? Are you picking up the jewels that I'm dropping? This is not financial advice, but wouldn't it be wonderful if it was? But it's not. But if it was, you won't lose a lot of money. Okay, look, price is making lower lows. The MACD is making a higher low. You see that histogram getting smaller here? And the MACD line is turning up toward its signal line. Can we get a bullish crossover where the yellow line crosses above the crayon line? Where the stochastic right here has already given us that. The KST, which is a slower moving momentum indicator, is still pointing down with the bearish crossover. So the QQQs, as far as momentum is concerned, is looking a lot better than the DIA and the SPY. Now, let's take a quick look at the guppy. You see ain't nothing changed. The guppy look just like the rest of them, even for the Qs. Even though the momentum is getting a little better. You see the magenta line of closing prices is stuck below the downward trending faster green moving averages, and the downward trending longer term red moving averages are pointing straight down. Look, it's clear. It's a lot of momentum to the downside, y'all. And we having trouble getting above just the immediate resistance levels with the moving averages and our structural chart. Let's look at the IWM real quick. Look at the IWM. It's looking worse. As far as with the moving averages, it's looking the worst. You see that with the IWM? It's looking the worst. We still, excuse me, I'm sorry. We are still, this thing looking so bad almost choked me. It's still closing below a downward trending 5-day moving average. It's nothing to talk about. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row. We have closed below a downward trending 5-day moving average. We got a downward trending 9-day moving average. It's not even testing it. And we got a downward trending 21-day moving average. It's nothing to talk about, okay? It is nothing to talk about for the IWM. This thing is going down, 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 down until it proves us something different. It has to prove itself, all right? But right now, listen, the weight of the evidence is to the downside. Let's look at the structural chart. You see it. You see it. You see that big, thick red line right there? That real big, thick red line right there. You see that real thick red line right there I keep pointing at? You see that? That's the March 2020 highs. We are below it. That's the March 2020 highs. We are below it. And we still find a resistance at this fractal right here at the 168 level. Okay, 168.09, 168.09 the first one, 168.90 is the second one. We tried to get above it for 2 days now, and it has gotten rejected. But the real big problem is we're below this real big thick red line right there. That's the March 2020 highs, okay? We are below that, okay? We are below the March 2020 highs right before the corona collapse, all right? Look at the momentum. The momentum is clearly to the downside. Look at the MACD. Look at the MACD. The MACD line has given us a bearish crossover, and it's pushing to the downside, well below the signal line. The histogram is in the red. Look at the stochastic. Bearish crossover way up here. We're now well below 20. It's at 15 and some change. The KST bearish crossover pushing to the downside. The momentum is to the downside. We don't even have to look at the guppy. It's the same problem. Now, let's finish up with the last one is the ITOT. Are you following me? We are middle traders. We are not going to get in at the exact bottom because it has to prove itself. You want to get chopped up and hurt? You want to get your head handed to you playing around? Let this thing prove itself. For us, it makes a lot more sense. Look at the ITOT. Same thing. We closed almost to the penny and got rejected at the 9-day moving average. We closed right on the 5-day moving average. Downward trend in 21 is right over its head. Okay? You see that volume was higher than the previous day and higher than above average, and the percentage change was 0.4%. Clear distribution. Okay? Clear distribution. And we got rejected at the downward trend in 9-day moving average. All right? The market has to prove itself. The ITOT has to prove itself. Be careful. Be careful. All right? Be careful. Look at the momentum here for the ITOT, daily charted ITOT. You see the bearish crossover on the MACD. You see it's well below its signal line. You see the histogram is still in the red. You see here we got the bearish crossover way up there on the stochastic, and now it has went straight down to oversold levels. It's below 20. You see it's at 17. The KST still got the bearish crossover and pointing down. The momentum is clearly to the downside. The momentum is clearly to the downside. Why fight that? Why fight that? Let the market prove itself. And if you look at the structural chart of the ITOT, you can see it. Okay, we're still stuck below these horizontal resistance levels. You see that? We still stuck below these horizontal resistance levels right here. All right. So right here, we got these internal trend lines going across here. We got the internal trend lines here that we finding some support at this internal trend line, but we still below this horizontal overhead resistance level. What are those levels? The fractals that made the bottom of the double bottom, the first low and the second low. All right, these overhead resistance level is right there at $84.59, and the top line is at $85.25. 84 is here. We got to get above this downward trend line, get above the 84.59. Then we got to get above the 85.25. Okay, this thing is still got a lot of overhead resistance. So to sum this all up, all of the major ETFs, major index ETFs, are hitting resistance or approaching resistance on the daily charts. We haven't even looked at the weekly yet. We have resistance. Okay, almost all of them came to the T and stopped at the downward trending 9-day moving average, barely staying above the 5. Be careful. Be careful. Be careful. See you in the next video.